class on accounting process. I am recapping for 5 minutes, taking up all the previous 6 classes in a nutshell. Accounting is the process of preparation of the statement of events, and that statement of event is basically known as account. So accounting is the process of preparation of account. Now, how this process is carried out? As I have already told you, a process is a set of functions interlinked and interlinked, performed systematically to attain the desired goal. The accounting process starts as soon as the occurrence of an event. So what is an event? Any happening is regarded as an event. Events, there are multiplicity of millions and millions and millions of events are happening every day, but all are not subject to our issues. All are not subjected to be accounted for. All are not subjected to be taken into account, taken into consideration. So we would only consider the important event. What are important events? The events are of two types. One is important event and the other part is non-important event. Non-important event, keep it aside. Important event. Important event is also of two types. One, which may be important to you, but it may not be important to the rest of the world. So what is important and what is not important, it is actually basically a relative term. So since importance, the term importance varies from man to man, but one thing is important to the students of commerce and economics and management, and that is finance. So money is the Mahashoy. So money is the single matter which is important to all alike. And to each and everybody, that those events are considerable which have some connection to money. So monetary events, the events resulting concerned with exchange of goods and services, resulting in whether in terms of money and resulting in changes in the financial position is our issue, and that is transaction. So while any transaction takes, whenever any event takes place, our first task is to identify whether they are a transaction and whether they are not transactions. Yes, transactions should be our issue, no transactions will be given by. Now, identification is done. So the first part of accounting function is identification of transaction. Then identification is followed by finding out the rules of debits, finding out the debits and credits. We basically follow the double entry system of accounting. That way I have already told you. Accounting is an age-old issue. The accounting started from the very advent of the civilization. Since the human memory is very limited, it haven't been the practice of the human being to put it in black and white. But in your house, you see that your parents must be maintaining the records of the expenditure and the incomes. Okay, so and it happens in each and every family. But so far as our organization is concerned, we follow some scientific principles, and the scientific principles it has been developed and in the 16th century by Luca Pacioli, and he gave us the system of double entry system of accounting. Double entry means each and every transaction, as the transaction will be defined as lane and then, to receive and to give. So a transaction has got two aspects. The accounting system that gives the respect to these two parts of the events, two parts of the transaction is known as double entry system of accounting. So double entry system of accounting is that system of accounting which records both the aspects of transactions. And there are other, I have already told you, another is single entry system. Single entry has not been defined anywhere. It is relatively defined. In the books of accounts you will see the single entry system is there, which is not double entry. So that system of double entry principles of accounting, double entry system of bookkeeping, WT system of accounting is our generic issue, and those system and other system which is not WT will be regarded as single entity. So that is a very ridiculous definition, but it is that. Okay. Now the system of double entry principles requires the accounting starts as soon as the event and transaction takes place, and we find out the debit and credit. So identification of transaction and finding out debit and credit. Then it follows the next function, and that is the function of recording. There are two types of recording. I have already told you. One is as soon as the transaction takes place, it is recorded somewhere, and that somewhere, that is known as journal. What is journal? Journal is that book of accounts where the transactions are primarily recorded. When it is recorded, it is recorded as soon as it takes place. So it is recorded, the transactions are recorded in journal chronologically. 1, 2, 3, 4, 5, 6 in that way. It follows. Okay. Now from that journal, we want to have a specific knowledge as to the event-wise, topic-wise, item-wise record of all the transactions, And these are as for started business with cash account debit to capital. So cash, we should maintain the records of cash, and there will be huge flow, inflow and outflow of cash. So this should be recorded. This should be recorded separately in a separate page, and the capital that should be recorded in separate page. Purchase goods from for cash. Purchase account debit to cash. As I have already told you. So purchase a page should be made ready for recording all the purchase. So it may be cash purchase, it may be credit purchase, it may be purchase program, it may be purchase from Rohim, it may be purchase for anywhere else. It may be purchased through cash, it may be purchased through bank payments also. So each and every aspect, each and every must have one separate ledger, separate pages. And from journal, we record that thing in that book. It is a set of books. It is a set of books containing a good number of pages. Each page is devoted to a particular account, and that is known as final record. And that book is known as ledger account, and the ledger is regarded as the book of final entry. And from journal to ledger. So journal is the first primary recording. From journal we record it in the ledger. Okay, and that is known as posting. Yesterday, and that so far we have done up till yesterday. After our conclusion at the flagging of the 6th class, I think we have completed that part, primary recording and final recording. And that is what I have done yesterday. And now the remaining part I would like to do. What are the remaining parts? Before coming to the remaining part, I am again taking up the yesterday's issue. Yesterday our first transaction was Mr. Akash started business with rupees 50,000. It has already been told. The debit is cash account debit, and whenever and the amount, who is giving the amount is being given by Akash. Akash is the owner of the business, and when the owner gives invest any amount, it is known as capital. So the first journal was a cash account debit to capital. Then where cash account debit to capital. Now where to record? So it should be recorded in the debit side of the cash account, and it should be a separate account should be that is capital account, and it should be recorded in the credit side as capital has been credited. Our practice is to write in the debit side, each and every ledger account have two compartments. One compartment of equal space and equal item. First part is debit, one part is debit and the other part is credit. So that is equal part. Okay, now this debit part has date, particulars, ledger folio at amount, and so also date, particulars, ledger folio at amount for the credit part also. And so that is the basic structure of ledger account. Now cash account is debited. So we should write in the debit side of the cash account 50,000, and our practice is to write in the debit side. We write it is prefixed by 2, and in case of capital, in case of credit, we use by. So if you do not write 2 A's capital or by cash capital, if you write only A's capital, it would suffice the purpose. But our convenience suggests that if you do, it is good. If you do not, it does not matter. But so far as academics are concerned, so far as syllabus is concerned, you may not be, some marks may be deducted by the honorable examiner. Now, so it is debited in the cash, debit side in the cash account, S capital, or which date on 1/11/20, and that is again recorded in capital account by cash. Okay, 50,000. Now, so far as the whole cash account is the basic account, so it is in each and every organization where it is the first page is utilized for the purpose of cash, and it may be first, second, third, fourth, and many other pages. And capital account, I have used the page number 2, ledger folio 2. So here we are writing the date. And which date the transaction takes place? It takes place on the 1st of November. So it is 2 capital and 2 capital. Where is capital? The capital we can get the capital account is in the folio number 2. And what is the amount? 50,000. Clear? And here we are writing by capital and ledger folio 1, because cash account is in our page number 1. Next one, second. Purchase goods for cash rupees 5,000. Okay. Purchase goods for cash. What is the journal? For purchase account debit. Purchase account debit to cash. Here, how much? 5,000. So this purchase, so purchase account debit is debited. So we have to make another account. We have to prepare another. We have to make another folio ready for recording in the purchase. You see, we have recorded 2 cash, because purchase account has been debited and cash account has been credited. And in cash account, what we are writing? By purchase. Clear? Then comes another sold goods for cash. Okay, sold goods for cash. How much? 12,000. Okay, the journal is cash account debit to sales. Cash account debit to sales. Now cash should be debited. So in the debit side we have written 2 sales, and we have to prepare another account, and that is sales account, and we have written by cash. Okay. Then comes another aspect. Purchase goods, purchase goods from Raj for 7,000. Now what should be the journal entry? I have already told you. Purchase account debit. Goods are coming. Purchase account debit, and it is cash transaction? No, it is not mentioned whether for cash or on cash, but the name of the party is given, so it should be presumed that it is a credit transaction. So the journal is purchase account debit to Raj. So where it should be recorded? We should record it in purchase account. So purchase account debit, it has been debited to Raj. Okay, and Raj account has been credited by purchase. And page number of purchase is 3. So here we have written 3, and Raj's account is a folio of 6. So the folio 6 has been given over here. Clear? Then comes sold goods to Rajan, rupees 10,000. What should be? Sales account credit automatically, no problem. And what is coming in? Nothing is coming in. Who is the receiver? Rajan is the receiver. So Rajan account debit. So journal is Rajan account debit to sales. So to Rajan account I have written 2 sales. Okay. And in sales account by Rajan. Here. So in that way we are making the posting. So postings are being done in that way. Then comes the other. Cash paid to Raj. Cash paid to Raj rupees 5,000. Okay. What is the transaction? The cash is going out. So cash account is credited, and who is receiving? Raj is receiving. So the journal entry is Raj account debit to cash. So in cash we will write by Raj. We have written, and in Raj account we have written to cash. So Raj account has been debited. So it is Raj account has been debited to cash, and cash account has been debited by Raj. Then next one. You see, the cash paid by Rajan rupees 6,000. Cash paid by Rajan, that is I am receiving cash from Mr. Rajan. So what is the journal entry? Cash is coming in, cash account debit to Rajan. Okay, so in the cash account I have written to Rajan. Okay, and in Rajan's account we have written by cash. Clear? So I have taken only 7 transactions because huge transactions are there, different multiplicity of the transactions, different types of transactions are there. But for minimum understanding, I am doing all these things because because the space is small and we have to complete the total process. And later on, I will take huge number of journal entries differently on other dates. But right now, I am going to next step. So my first step is that making entry has been done, then posting and ledger. Next, the task is casting. Okay. One thing you should take in mind that the accounts are closed in every period. A period is fixed. A period. Finally, account of any organization is prepared at the end of the financial period, accounting period. Accounting period is a period consisting of 12 months. And this 12 months is segregated, maybe segregated into 12 months. It's a period of 1 year, that is 12 months. And each and every organization maintains journal and ledger and make it balancing at the end of a specific period, small in number. Okay? The small in the volume of the days. Some organization maintain balances the records every month. Some organization fortnightly, 1 and 15, 1 and 16. Some organization the last date of the month. So the balancing date depends on the practice of the organization. Say in our organization, Mr. Akash has been maintaining closing the accounts every month. Okay. Now he has effected this number of transactions during this month. Now he is going to close the books of accounts for this month. How would he? Then for closing, we have to cast. This is known as casting. Casting means adding the items. How many items? What it is? 6 to 8 and 7. Okay. So it is 78,000. Clear? It is 78,000. Now in this part, how much it is? Cash 5,000 is there, purchase and cash paid to large. Yeah. So it is how much? 10,000. Clear? Now this is casting. So it is 68,000 and it is 10,000. It means that now you have to, so casting is the totaling, okay? That is totaling the amount. Now you see, you have to balance it. So if you want to balance, how much you need? I have to make it equal. How would I make it equal? Here it is 68,000 and here it is 10,000. So how much? I have to make it 68,000. Clear? Okay, and this, in order to do that, there is a gap of how much? 58,000. 58,000. And that is the balance on the last date. Clear? And in the last date, okay? It is 30th 11 2020. By, we have the practice of writing, it is right by balance CD. Calendar. What is the balance? It is the debit side is higher than the credit side, so it should be treated as debit balance. Okay. The difference between the debits and credits has been written over here. The debit is higher, so it is debit balance. Clear? Now, in the coming month, that is in the month of December, so in 1, 12, 20, we should carry the balance, so bring down the balance, and we should write by balance BD. BD stands for brought down. Okay? Clear? So This is costing total, that is 68,000, and here 10,000. But we have to make the both side equal. What I have told you, every debit must have its corresponding credits. So here is a gap of 58,000, and that gap is known as the balance. Here, since debit side is higher than the credit side, so it is debit balance, and we are in the coming month we will start with this balance. So it is debit balance. Now in this month, that is in the month of December, we will again go on maintaining the record in the same way, and we will balance it at the flag end of that is 31st December of 2020. We should balance it. Okay. So this is the process of balancing. Okay. So balancing has got balance carried down. Why it is carried down? It is the debit balance carried down over here. Okay. It is the debit balance carried down over here, and now this carried down balance again brought down because it is debit. And for the coming session, for the coming period, we will start with that. Clear? Okay, now come to this part. Here. Capital account. What is capital? It is 5,000. And here it is nothing, no? Here it is nothing. So, but we have to balancing it as because we are following double entry. Okay. Now, so far there is nothing. So we will write what? On 30th 11 we write to balance CD. What? How much? 5,000. 50,000. Oh, sorry. It is 50,000. Clear? Now see, here the balance is 50,000, here is nothing. So while casting we are getting 50,000 over here and there is nothing over in that part. So that is the total balance, okay? And it is what type of balance? It is credit balance, as the credit side is higher than the debit side. And this is again will brought down in the first date of the following month, okay, by balance VT bottom. How much? 50. There. So this is the process of casting and balancing. Any problem? I think no. If you have any problem, please make a comment and I will help you in getting the problem solved. Now come. Now I am coming to close the account. Now in the case of purchase, what is happening? Raj, so Kr.Chakrabarti, 25th, 11th, 20. It is how much? 12,000. Here, there is nothing. And since all purchase is always debit, if you do not commit any wrong, so their purchase will always be debited. So here in the credit side, no item is there. So what is the total? Total is 12,000. Now that is the balance. What type of balance it is? It is 30th 11 20 by balance CD. Okay, how much? 12,000. What type of balance it is? It is debit balance. Okay, as because debit side is higher than the credit side, and we would in the first day of the following year, following month, following period, I would like to say later, balance brought down. It is 12,000. So at the end of this month, what we have seen, we have a cash balance debit for 58,000, capital balance credit rupees 50,000, and purchase account balance 12,000. Now let us come to balance this account, ledger account. Sorry, sales account. What is the date? Last year. It is 29/11/20, and cash 11, 20. So generally it will come over here and this one here. Now what is the total? It is 22,000. So I am totaling it, I am factoring 22,000. Here nothing is there. So with it will be 23,000. Now what is the balance? Balance is 22,000. On which date? 30th, 11, 12, 2 balance CD. Okay, carry it down. What type of balance it is? It is credit balance. Okay, so 1, 12, 22, 20 by balance brought down. How much? 22 CD. Here, now we have closed how many accounts? We have closed cash account, we have closed capital account, we have closed purchase account, we have closed sales account. Sales account is credit, okay, and it is always B, as because we know that all purchases and purchase account will be for all sales, it is sales account credit. So sales is a credit item. Now come to Mr. Raj. Cash purchase, purchase goods from Raj, rupees 7,000. And which date? It was in some date. Say any date was there. Say it is on 5th. It is 5th. And now we have made a cash payment of rupees how much? 5,000. Now the total should be, it is how much? It is 5,000 and it is 7,000. Clear? Now we have to make it equal, okay? How? In order to make it equal, I have to put 2,000 over there, okay? And this 2,000 is the balance. Here. So on 30th, 11, 20, the balance of Mr. Raj is balance CD 2000. And now from 1, 12, 20 by balance brought down is 2000. Now what happens? I purchase goods from Raj to rupees 7,000 and I have paid 5,000 only. But he was originally the creditor of rupees 7,000, but I have utilized some amount for 5,000. So he is still our creditor. So it is what balance? Credit balance. So gradually you will learn that all creditors are credit. Okay? All creditors are always credit. All purchases are always debit. All sales are always credit. All debtors are always debit. All creditors are always credit. Cash is always debit and capital is always credit. Clear? Now let's come in this account. Now we have purchased, we have sold goods to Raj at rupees 10,000, okay? On some date, say on 10. Okay? On 10. And now he has given only 6,000. So how much? Now we have to balance it. It is 6,000 and it is 10,000. So in order to make it 10,000, we have to balance it. 10,000 is possible when we add another 4,000. So that is the balance. Okay, the balance is on 30th 11 2020. Our it is by balance CD rupees 4,000. Okay, and on the first day of the second period, that is on 1/12/20, it is 2 balance brought down rupees how much? 4,000. Here. So Rajiv is our debtor. Why debtor? Because we have to get the amount from him. Clear? Now, thus we have got our 6 accounts, and these 6 accounts have been closed. Clear? So what are the different parts? We have made entry over here in journal. Making entry is a process of accounting. Then putting this in the different folios of the different accounts, that is known as posting. So another function. Third function is totally, that is casting. Third function. Then fourth function is balancing. One is balance carried down, and the other one is balance brought down. Here. Now come to the next part. Now I would like to summarize that different transactions takes place, different transactions have been taken place, and what is the present status. I would like to check whether I have committed any wrong or not. I have to find it whether there is any wrong or not. How many balances? There are 6 balances. Some balances are having debit balance, some balances are having credit balance. Let us make a majak. Debit balances and credit balances. Now, what are the debit balance? Cash is debit. Cash debit, how much? 58,000. Capital credit, rupees 50,000. Capital get 50,000. Then purchase debit. Purchase is debited. The balance BD. In fact, just for practical information, for practical instruction, I will let you know. It is that balance where balance brought down is written. Balance brought down is written in debit side. So it is debit balance. So purchase. How much? 12,000. No? Then sales. How much sales is written in the credit side? So sales is credit. Sales is having a credit balance. 52. Now Raj. Raj is having a credit balance of 2,000. And Rajan is having a debit balance of rupees 4,000. Now I am totally in. Yes, I am totally in. What is it? Is 74, and it is also 74. Okay. Now, what is this process? This is the process of summarization. This is the process of summarization. Summarization means we have made initial records in the book of journal. Okay. Then we have made detailed record in ledger accounts. So we have made huge task. Now my responsibility is to find out whether I have committed any error or not. In order to test the arithmetical accuracy of the accounts kept, I would like to summarize it. Okay, the summarization is a process of taking all the balance together. Understood? Summarization, it is not written in any book. Please take it into mind. What is coming to my mind right now, I am studying that summarization is process of getting all the things in summarized form. That means the summarized form means the summary, that is the balance form. Okay. So all the balances of the accounts are taken together. What are the accounts? Cash, purchase, Rajan, capital, sales, Raj. So there are the different accounts, and the account balance are taken together. So we have taken all the 6 balances. And now we have made a segregation. The debit aspects, debit balances in one side, as East Bengal one side, Mohun Bagan one side. So all the Bengal players are taken together who are playing in these two countries, two stadiums. So all the East Bengal players are taken in one side, and all the Mohun Bagan players are taken on the other side. And where we get, and this shows that both the sides are all equal. No win, no loss situation. So it is a win-win situation. Here, and this summarization, and this is technically known as trial balance. This is technically known as trial balance. This is known as trial balance. What is trial balance? Trial balance is the product. Trial balance is the product of the summarization of all the ledger balances. Number one. Okay. Just friends, I am rubbing this. Okay. Just I think we have sufficiently told how the balances are. It is credit, cash is debit with 58,000, it is written over here. Capital is credit, which is 50,000, written over here. Purchase is debit, 12,000, written over here. Sales having the credit balance of 22,000 over here, and Rajat 4,000, Raj 22,000. So we have taken all the balances, and we have taken all the balances together, and with the help of these balances, these balances are taken simultaneously and segregated into two parts. One part goes for debits and one part goes for credit. And every debit must have its corresponding credit. And when this summarization states that both the sides of debits and credits are equal, it means we have recorded at least with due arithmetical accuracy. And this is a statement, and this statement is known as trial balance. Okay, so trial balance. As on in Medal, because it is prepared at a particular date, and which date? It is on the last date. Okay, 12:30. Then this is known as trial balance. So trial balance, what it is, when it is, how it is, or what it is. Trial balance is a statement. It is a statement. Statement of what? Statement of ledger balances. So, trial balance. What is trial balance? Trial balance is a statement of ledger balances. When it is prepared at a particular date. At a particular date. So for what it is to test the arithmetical accuracy of the accounts kept. Clear? What is trial balance? First, trial balance is a statement. Statement of what? statement of ledger balances. When it is prepared at a particular date. For what purpose? To test the arithmetical accuracy of the account scale. As you have done, okay. Say your teachers have given different notes in your class, and what you have done, you have recorded it in your diary, class diary. Regular classes, you are sufficiently grown up, you are not supposed to, just the process I am telling in your house, what you basically follow. You are sufficiently grown up, you are not supposed to carry the huge number of copybook in your bags, okay, because it looks very bad, okay. Like school boys, you are not at all, you are sufficiently grown up, you basically come to attend your higher classes with a diary, okay. And what the notes, what the lessons given by the teacher, you write it in your diary, a particular diary. And that diary is your journal. Okay, that diary is your journal. Now, because here you are giving the date and writing each and every item. Say it is history, geography, English 1, English 2, Hindi or Bengali or computer, chemistry, physics, biology, commercial application, whatever it is. You are writing. So that is your diary, is your journal. Now going home after having your meal, you go on writing, putting these things in your book separately. One for biology, one for physics, one for math, one for chemistry, one for English, one for history, geography, and so on and so on. Okay, so that is ledger. Clear. Finally, after few classes, you try to tally whether what has been recorded primarily and what has been recorded finally, they are maintaining due parity or not, and whether there is any error or not. So in order to test the arithmetical error, only you make a statement, and that statement is known as trial balance. As the name suggests, therefore trial means trial means testing. Balance means ledger balance. And our objective, the name is very scientifically given. Trial means testing, balance means ledger balance. So we should test the ledger balances. We should test the accuracy of the ledger balances, and that is done through trial balance. Clear? And this trial balance is the process of preparing trial balance is basically regarded as summarization of accounts. Clear? Thus, what we have seen so far, I have more or less completed a great part, because again I am repeating, first part of accounting steps. First steps in accounting is the occurrence of the event. The events are to be analyzed whether they are transaction or not. We get the transaction, that is identification of transaction. Then we proceed on debiting and crediting, and after that we go writing, recording. First recording in the book of prime entry, that is journal, and that is making entry. From journal we prepare ledger accounts, and ledger account has got different steps. One is posting, next one is costing, the third one is balancing. Okay, and after balancing, we summarize all the statements of accounts, and our objective is to find out the arithmetical accuracy of the account scale. And for that, we summarize the accounts. What we do, we take all the balances of the ledger accounts taken together. Then they are segregated into two parts. One is debit balances and the other are credit balances. When the total side, both the debit and credit balances agree, we are happy. We have done the thing right. The marks will be given 100%. So my accounts are okay. But as we go on entering into the depth of the accounting, balance is not the conclusive proof, but it gives you at least one proof that arithmetically you are correct. Arithmetical accuracy of the account scale, and that is the objective. Now, what is trial balance? The trial balance is statement of ledger balances, which is prepared at a particular date as the last date. For what purpose? To test the arithmetical accuracy of the account scale. And as the name suggests, trial means testing, balance is ledger balances. Okay. So, friends, this is the basic part of trial balance. To Tomorrow again I will come. Tomorrow I will consider some critical journal entries, critical transactions for making generalization. Okay. So tomorrow we will be having class, and I will give you some complex transactions, and those are to be generalized. And my friends, you record it in your leisure in your house. Okay, and then tell me what are the results of that, and we will look at trial balance. And after that, after 2 classes, I will make separate trial balance. As because here we are getting the ledger balances from the accounts we have prepared. Okay, we have made journal, we have made ledger, and now we are preparing the trial balance. But I will, on that list, I will give you some ledger balances, and you will prepare the trial balance. Okay, so thank you, friend. Thank you very much. Today's, I think you must go through the topic. Any problem should please be intimated to me through your comments. Thank you very much. Have a nice